Has your money been working against you? When you invest, you expect your broker to execute your trades for the best possible price. That's the core promise of a brokerage. But the financial world is rarely that simple, especially when it comes to free trading platforms like M1 Finance. Recently, a wave of posts and discussions on Reddit, from the r/M1 Finance and r/Bubbleheads communities, have focused on a serious question: is M1 skimming profits off your orders? Now, this isn't a direct theft accusation, but it touches on a practice called payment for order flow, or PFOF, and its implications for how your investments are handled, especially with fractional shares. Let's break down the two main concerns coming from the Reddit community. 1. The PFOF concern and execution quality. M1, like many commission-free brokers, participates in PFOF. This means they get paid by market makers to send them your orders. While completely legal, the Reddit discussion zeroes in on the potential conflict of interest. The worry is this: if your broker is getting paid to send orders to a specific firm, are you getting the absolute best execution price? Even tiny price differences, a fraction of a cent per share, can add up when you're talking about thousands of transactions. On Reddit, investors question if M1's single daily trading window and PFOF setup are truly getting them the national best bid and offer price, or if a small concession is being made to the market maker, which M1 profits from, potentially at your expense. 2. The fractional share factor. The second major point of friction is M1's core feature, fractional shares and pies. Because M1 allows you to invest by dollar amount, owning tiny fractions of stock is the norm. The problem, as repeatedly discussed on Reddit, is what happens under the hood. Since you don't own a full share, you don't actually hold the stock with the central clearing company, the DTC. The brokerage aggregates all those tiny fractional orders, buys the full shares, and then allocates them internally. This has two implications that worry long-term investors. Portability: fractional shares cannot be transferred to another broker. If you ever leave M1, those fractions must be liquidated into cash first. This forces a taxable event, whether you wanted it or not, which can be a major headache, especially in a taxable brokerage account. The custodian question: because you don't directly own the fraction at the clearing level, some Reddit users express discomfort that they are relying completely on M1 to be the custodian of that fractional piece. Ultimately, the Reddit consensus is that M1 is fantastic for simple, automated, set-it-and-forget-it investing. But, for investors who prioritize full transparency on trade execution, total control over tax lots, or the ability to easily transfer all assets without a forced liquidation, the PFOF model and the fractional share structure spark major caution. It's a clear reminder that in the world of free financial services, you should always understand how the platform is actually making its money. With that said, thanks for watching, and until next time.